Hi, this is Jack Crooks from Money and Markets TV. While stocks and currencies in the industrialized world often move in opposite directions, it's a different story in emerging markets. Most of the time, their stocks and currencies move in tandem. That's because the asset markets in emerging economies are all driven by money flow. Emerging markets by nature lack a viable source of domestic funding, so they're highly dependent on developed markets for capital flow in the form of foreign direct investment and hot money. They also depend on developed markets to buy their exports because emerging economies have relatively underdeveloped consumer markets. Because of this dependence, the slowdown in the global economy is beginning to take a toll on emerging markets. And as economic growth in the developed world continues to decline, emerging market currencies will fall lower and lower against the US dollar. One emerging economy that is especially vulnerable to any decline in demand for its raw materials is South Africa. So one of my favorite long-term plays is shorting the South African rand against the dollar. There is already evidence that South Africa is starting to feel the pain. Over the first 3 months of this year, its current account deficit widened to the highest level in more than 3 years as exports to Europe slumped. A widening current account deficit is extremely dangerous for an emerging economy, precisely because of its dependence on external money flow. And when the deficit grows, it often leads to a weaker currency. In fact, the rand fell 1% against the US dollar just after the report was released. The most recent low for the South African rand came at the height of the global credit crunch in November of 2008. At the same time, the US dollar experienced a big rally as money flowed from emerging markets back to the center. If global growth continues to decline, I think the rand could test that low again. What's interesting about South Africa right now is that the stock market hasn't yet followed the currency lower, but I'm betting it's only a matter of time before that happens. If you want to play the downside, you can short the Wisdom Tree South African Rand Fund, ticker symbol SZR. Or if you're more aggressive, you can trade the rand itself in a standard retail spot Forex trading account. I'm Jack Crooks from Money Markets TV. Thanks for watching.